Hi guys, welcome back to ValeTalks by ValeTax. It's always a pleasure having you guys on our trading live experiences and where we're going to be discussing, charting, and also analyzing the charts as well. In today's episode, we're going to be talking about what is really best for retail traders. We're looking at, you know, forex currencies, we're looking at futures, we're looking at stocks and equities, and what really is the most favorable one for you as a retail trader, and where do we think you have the best opportunities or most opportunities to actually, you know, see better results, make better profits, and gain, better stable income from. And today with me, I have on this call two experienced traders, financial market experts. As a matter of fact, since we're in the spirit of the World Cup, allow me to introduce to you the Ronaldo and Messi of Valetax. Thank you so much, Manesh. Thank you,
Thank you.
Antonio, for joining in today. Manesh has been a guest ever since episode one of ValeTalks, and I believe if you've been following, you would know who Manesh is. Manesh is a CFTE trader. He has traded with the institutions. He's traded both in the retail world and in the institutional world. He is the author of Trading with Ichimoku Clouds, and he has over 30 plus years of experience. And on the other end of my screen is Antonio Montiel, who also is another legend. He is he is both the legend and the myth. He's traded on the institutional side and the retail side as well. And he also is an author of the book called Trading Forex in Portuguese, spoken in Portuguese, and is one of the best-selling authors when it comes to the financial market and forex trading in Brazil. Thank you very much, Antonio and Manesh, for joining in today. I really wanted the both of you to be on this call because I believe you both have touched in on every aspect of the financial market, be it equities, be it futures, be it currencies, indices, whatever the case may be. So you would have a better understanding considering the fact that you've also traded on the institutional side and on the retail side. And I know you've most definitely have dabbled in both sides of it. So really today the conversation is what would we say is best for retail traders? And when I mean retail traders, of course, I'm talking of not people who are trading over the counter, because sometimes people, mistake it. We're talking about the digital MetaTrader 5 traders, right? Like myself with just 7 years experience. I'm getting to 30 very soon. But yeah, so what would we say is the best option when it comes to retail traders? What and why exactly? So we've outlined and highlighted stocks, futures and currencies, which is the standard forex. So I'll start with Manesh.
Okay. Um, that's a question that there's no clear answer for it, right? It just
Okay.
depends on the if the trader experience a brand new retail trader, that has a major factor in determining what's going on.
Right.
And it's also the question is a matter of it being an opinion. In my opinion, I think Forex is the best for retail traders, and for
Okay.
a couple of reasons. One, it's a 24-hour market. It means that the retail traders working, they have the ability to still trade after work, before work, or between breaks and holidays and stuff like that. Um, Two, it's 12 major pairs, so that you could concentrate on those 12 major pairs and find opportunities in there. It's not like the stock market where there's 5,000, 10,000 instruments to look at and so forth. When
Yeah.
you start dealing with stocks, you kind of need a scanner to go through and scan for the opportunities based on your strategy. And that's
Yeah.
adding a whole new element into things. Futures, a lot of people gravitate towards futures, especially US futures, but believe it or not, one of the brokerages here always said this many years ago, is that future products were never meant to be traded, but retail people keep trying to trade them. And believe it or not, that's the biggest way to fail. Believe it or not, statistics show that anyone that just day trades futures have a low probability of being consistently profitable.
Mm.
So if you look at the statistics and the environment and everything, currencies, believe it or not, are the best thing, in my opinion, to trade.
Okay. How about you, Antonio?
Well, I will add some more flavor to Manesh because I agree 100% what he said.
Yeah.
The the retail traders, their main focus is to gain money with the price difference, right?
Yeah.
So they want assets that moves, that has liquidity. So I think it's just like Manesh said. I think that the best there's not one best for the retail trade, the asset for the retail trades, but it's just like a formula, right?
Yeah.
Is they the asset has to be liquidity, because it needs to move fast. There's an issue of capital requirement, for example, and the retail traders in general don't have a lot of money to trade. So equities, for example, and stocks is just like very limited to them.
Yeah.
So they need leverage, right? So when you talk about the retail traders, they need leverage. So it's just a combination of the asset has to be a liquidity, capital needs, trading hours, which is
Yeah.
also important because here in Brazil, for example, the retail traders, the most part of them they have a 9 to 6 job, and they arrive home and they wants to trade. They wants to convert the plan B, which is trading, to their plan A. So, but
Yeah.
they need bills to pay. So they have to so the asset has to be 24 hours. So forex is the I think it combines the all of these elements: liquidity, capital needs, because in general they don't need much money to trade forex, trading hours, leverage. There are also some other issues going forward. For example, the technical analysis, because a lot of them use technical analysis. So it has to
Yeah.
be an instrument where in which technical analysis works best. And we know that in the stocks there are other things that makes price that's not 100% technical analysis. So that's why stocks is not, I think, fully indicated to the retail traders, at least the ones who are starting and have a capital
Yeah.
limitation.
Okay. So one of the main things that pushed me into this conversation is I see a lot of traders today moving into trying to trade futures, and one of their quote unquote reasons being is that the futures market has I think has a higher margin, right? So profits are actually acquired faster. Small lot sizes gives you better returns, especially when you're trading the Nasdaq futures or the S&P 500. They gain better returns and in a shorter time, right? So on the forex side of it, where we're trading just the leveraged version of the Nasdaq, we probably would need to get over 100 points or 1,000 points to be able to see sufficient and substantial profit with a little lot size. Probably the median probably zero point 0.1. But on the future side of it, with the contract size of I think 10 contracts or 100 contracts in a shorter space of time, they make more profits. So long term, according to what Manesh was saying, he stated clearly that there've been no proof to long term, profitability and sustainability from people who trade futures. So what can we say is exactly the reason to why we're getting a lot of retail traders wanting to try that out? Is it just because of the profit, or is there something currently happening that is gravitating them towards that?
I mean, if you, sorry, I could go. I've seen this over and over and over, and
Yeah,
it's there's a couple of reasons why. It all comes down to the issues all traders have in general, whether retail or institutional and stuff like that. Being patient, waiting for opportunities and stuff like that. If you're
Yeah.
trading future products, you're typically trading one product. Most people are trading the E-mini S&P 500 futures. Reason why that gives you the biggest bang for your dollar.
Yeah.
And that's pretty much kicks in your greed side, right? So now what you're doing is you're trading one product instead of a couple of products. So you're now looking for your strategy setup in that one product. And if you don't get it right away, you start becoming impatient and
Mm.
start forcing things that are not there. So to me, I think the biggest problem in trading futures is that you're trading one product, and as retail traders, all their weaknesses within themselves come out. Whereas if you're trading more diverse products, like if you're trading the whole currency market, now you have 12 opportunities. You're not becoming, in one with one and kind of getting sticking to it. You're looking across those 12 pairs for your strategy, and there's a higher probability your strategy will exist in those 12 pairs so that it doesn't require it to be that much patient compared to E-mini and stuff like that.
Yeah.
And also it doesn't require greed. The currency market teaches you how to become a good trader, believe it or not, because it's helping you avoid a lot of the weaknesses that traders exhibit from being impatient, greedy, and stuff like that. It is a slow, methodical game, but remember, you're doing this to set up a career for the rest of your life, right?
Yeah.
You're not trying to do this where you're trying to win a lottery ticket all of a sudden, and then boom, you're done. And if you look at most people that win the lottery ticket, they're bankrupt a couple of years later. So your goal is to achieve consistent profits, make a career out of this. And for me, the goal was to get the benefits of trading, but not spend the hours that you do in a corporate world. So make more money per hour, but work less. And with the currency market, it allows you to do that, especially with the flexibility that it has that is 24 hours.
So, so if we're to look at it, from your description, right? It would then mean that at the end of the day, traders don't have exactly a market problem. At the end of the day, it's always still going to be the trader's problem in this essence. So I could still be a futures trader and be successful only if I know how to manage and what exactly my goal is. For you, your goal was to make um more money in lesser amount of time, and also variety. You didn't want to have to wait for, just trading one asset. But if I, as a trader, am comfortable with trading one asset, and if I don't find a setup, I'm good with that, and I can walk away from the market, it means I could still be a futures trader.
Yeah, I mean, if you look at it, I mean, Antonio, for all the years of experience, do you know a futures trader that's been consistently profitable 5 years or more? Have you ever seen
No,
that? Has anyone ever seen
no,
that?
it's
No,
very difficult. No.
not. And
Mm.
remember, I live in the US, so I'm dealing with the New York Stock Exchange and NASDAQ and stuff like that. In
Yeah.
fact, one of the biggest brokers here that got bought out, his owner in a public forum in front of 1,000 people said, and this is back in, about 10, 15 years ago, he said, most retail people, traders gravitate towards the E-mini and they trade it. He's like, I don't understand because it's a hedging product. It was never meant to be a trading product. And he said, majority of clients come to us and trade future products, and they're the most unsuccessful traders ever. And
Mm.
this is coming from the CEO of a brokerage company where they're making tons of money off the commissions off the broker. This was for U.S. stocks, okay, not even dealing with currencies. They just specifically dealt with U.S. stocks and futures. And he said, we make the most money from them, but the traders never consistently profitable. And in all the years of trading, I've never found a futures trader that was
Mm.
consistently profitable for 5 years or more.
Yeah, it's true. If I can add something, to this
Yeah,
conversation, I
yeah,
agree with
on you.
I again completely agree with Manesh, because this kind of instruments are not made to be used like the retail traders use. That's the first thing. They're hedging instruments, and
Yeah,
sometimes there's some flows that comes into these instruments that are not explicable by normal means or technical analysis, because they're just hedging things, right? If there's a large institution that has a particular operation and needs to buy, doesn't matter what is happening with the market, they will buy, right? They needs to do this operation, and all the things goes down, all the correlations are exceeded at this point, because they needs to construct this position. For example, if all the
yeah,
markets are going down and there's there's a buy need for a hedging thing, which is not
mm,
a price direction related thing, they will buy, right? And they will hold the market until all their needs are filled. They will broke all the retail traders that are selling things that the supposing that the things will go down, trusting on
yeah,
their correlation without knowing too much statistics. And then when their hedging needs should be filled, the market will go down. But until that happens, they will stop out a lot of retail traders. And nothing talking about the when you talk about futures, they're high margin requirements. The 1 point move, it's too expensive for them. And okay, it will be a huge profit when they're right, but it's a huge loss when they're wrong, especially in these moments
yeah,
when they don't understand the flow, because we can see the flow, but we don't. When we teach how to trade using money flow, we just said that they can see the flow, but they can't explain the flow because they're not in their bank, they're not knowing where this is coming from, right? So the future contracts are very dangerous because of that. Again, when you compare with forex, it's just like $4 trillion. There's a lot of money it can hold a lot of flows without being affected by a
yeah.
momentary flow from one hedging position, for example. It's more, I don't know if the word safe is good, but it's safer to the retail traders, because there's a high liquidity. Again, as I said,
Mm,
just like an equation, liquidity is a part of this equation that the retail traders should be
yeah.
care when they trade the markets.
Okay, very true. I completely agree with both of you because I also believe that the foreign exchange market is the most preferable for a retail trader because number one for me is variety, right? And what can be applicable to everything across board. Yeah, so for futures, for instance, when we look at the Nasdaq futures, you would expect to have to factor in earning reports and all of these things together. But on despite the fundamental side of the market when it comes to currencies and foreign exchange, you still have a bit more balance when it comes to your technical analysis. Supports hold, it's easy to see where probably the algorithms have come into the market. They leave very obvious technical signs for you on the charts and all of those things. And most importantly, your access to, they're heavy currencies. I mean, if you're looking for fast money, you could trade XAUUSD, you could trade the leverage version of the US 30, you could trade the S&P 500, you could trade the indices on the forex side of it. You could trade silver. If you're looking for something with a high margin cost, you could trade silver, yeah, and all of those things would work well. But with that being said, today we're also going to be looking at the markets, right? And everyone is trying to really understand what's next for the dollar. We saw a softer job report at 57,000 late last week, just before the Independence holiday. Um, we saw it lesser than expected at 110,000, but we saw 57,000, bringing in some short-term weakness into the dollar at the close of last week. But traders are asking this week, what should we be expecting? Are we going to see the continuous progress on the dollar strength, or is this going to be another major concern for the Feds? Are we going to keep the hawkish dollar, or should we be scared? Manesh, technically.
I think you have a different opinion on the dollar. For me, I'm looking at it as still being strong. So I'm
Okay.
still looking for the Euro USD to possibly go down. I understand last week was a bullish week, but it really didn't break the weekly high at all. So to me, that bar last week really doesn't matter at all. And if you look at the last 2 weeks before that, it's still bearish. You have a bearish trend. You retested the lows from back in March, and 2 weeks ago you broke it. You kind of pulled back to it, and then this week's going to really tell you a lot. So after Wednesday on, I'm definitely looking for the dollar to get stronger, if and looking for setups for that scenario, where the dollar is going to continue to come down. So that's what I'm looking. So my forecasting is dollar's going to get stronger by the end of the week, and I'm looking for setups towards that.
Okay. Thank you very much. And Antonio, fundamentally?
As I have the same perception, I think that the dollar is bearish. We have today we have the ESM PMI, which will give us a flavor of the week. But I think Wednesday with Fed minutes, we'll have a more visibility of where the market is heading. The payroll last week surprised everything, because we know all the markets are already precifying a inflationary scenario for US after
Yeah.
all these this war against Iran and the petroleum,
Yeah.
etc. I think it's too soon to shift the things. The markets are not too fast. They're not shifted too fast like this. And okay, it's so it's the numbers are low, and okay, we're now good now. So I'm still see a bearish bias in the dollar, and I think that the things are not resolved. Too soon to say that, because the economic data has a delay against
Yeah.
when the things that happen until it reflects in the data. So I
Yeah.
think it's too soon to shift. Yeah.
Okay. So, for me, technically, yeah, and with added sentiment, I still see the dollar to stay stronger. But I mean, everything, quote USD, which is Euro USD, AUD USD, I still expect to see them to continue bearish. The dollar broke a key level that I and Manesh have had eyes on for a couple of months now, which was the 100 level, the 100.3 level, and we finally closed above that 2 weeks ago. And then we had this last week coming in bearish, but I believe that midweek should complete this bearishness back into the 100.300 400 levels for correction, right? Just to test this level as a previous resistance, and flip back into a support for the dollar, and the dollar to continue bullish. I and Manesh had targets at the 104. Manesh, I don't know if you still have targets there, because yeah, let me zoom in a bit. So
Let me
I
check.
and Manesh had targets the 103, 104, and 105. I still have them marked out on my charts here. So that is why Manesh was saying we didn't get the previous week candle close bearish. Um so we're still expecting to see bullish continuation for the dollar. But midterm, before Wednesday, we can see some sort of play on correction for the DXY. We have this huge imbalance here on the hourly time frame. I think we see that on the 4 hour time frame and also on the 1 hour time frame. That there could be a possibility of prices to dip below if chances are created for that fundamentally, I believe. But major retest would be back into this level here. So I am speculating this to be an early entry. Inducement for traders jumping in on the buys already for this week. So probably a sweep on this inducement back into key levels before a continuation of the bullish strength for the dollar. And that would then bring us back to the Euro USD, where I'm expecting to see a full retracement back into the 1.151 key areas, previous support level, to be turned into resistance if it presents itself. But if not, a break back below the 1.13 600 500 areas here would continue to take the Euro USD bearish. So that is the technical outlook um, for this week on the XAUUSD. On the XAUUSD as well, we have something similar.
So we're all betting on the dollar getting stronger. That means we're all going to be wrong.
Yeah.
But everyone agrees on the same thing. It typically means we're all be wrong.
So at the end of it, it looks like dollar is going to stay stronger. Manesh, what's your view on the XAUS? It's a bit confusing for me because I previously had levels at the 150, 180 levels where prices currently, is at. But then I'm also seeing that there is a possibility for prices to go a bit higher back into previous levels that never got tested. I also have marked out, which is the 4242 region, right? So you see I had this on the 4242 region previous week and prices still didn't get there. So what are you thinking? Are we going to get back there?
I mean, the long-term support that we've been eyeing when we were betting on gold going down is pretty much the right around 4,000 level. So,
Yeah.
2 weeks ago, it got to the 4,000 level, held it. Last week, it came back and tested it again. So we took a risk and pretty much went long on gold there at 4,000.
Yeah.
Our goal is to trade it up to about 43.55. So it's a short-term bullish move to kind of see if we've reached the bottom or not. And the reason why is just because you get to a support doesn't mean it's going to go flying up. You
Yeah.
got to the buying action there. So we've held the support, which we wanted to see last week. And
Yeah.
then we saw some buying action, and we'll need to see it follow through that buying action this week to take us to close to 43.50. If we see that, then possibly it could be long term where it can come back up to about 47.50. But we have to see exactly if there's enough buying action right now to think of this being long term bullish and retrace the whole movement down from 4,800 down to 4,000. So, we're kind of testing the water right now to see if there's buying that's going to exist this week or not.
Okay. Okay. So we're still going to keep eyes on any bearish momentum shift at 4,240, 4,260 then. If no bearish shift in momentum here and we see prices break above 4,350, then there's a likelihood for us to go all the way back up to 4,700.
Yeah.
No, okay. No, okay.
So, I mean, we're bullish short term right now, and we'll evaluate everything by the end of the week.
Oh, okay. Okay. Antonio, any view on your most traded asset? I believe your most
Yeah,
traded
no,
asset
I
is the gold too, yeah?
yes. No, I agree with you. I see on the beginning of this week in the short term, I think that maybe could happen a small correction. Right now, we're seeing probably in the next hours, should be a correction, but in the middle term, it's bullish. There's a clear bottom, on these
Yeah.
on this 4,000, and I think that above. 14, 14, 42.20, 40, 42.20, 40, 42.60. It's your green region, your green
Yeah,
resistance.
yeah.
Above a bit, it should test again the 43.65. I have, it's pretty similar to your,
Okay.
is again this other green regions. So I think
Yeah.
this during this week it is probably the move that we will see this week. It's there's a bullish momentum. It's too soon to say that it's a reversal. It's a trend in
Yeah.
reversal because in the medium term we see that it's a bearish trend on
Mm.
the
Yeah.
medium term.
Yeah.
Yeah, so it's very soon to say that this is a reversal, but hey, any correction should be a reversal, right? So we have to be
Yeah.
have to be on eyes on that. I think it's a buying bias for this week above this 42.20 42.60 region. It's a buying bias, and the real test is the region of the 43.7 44.7. This $100 it's the shifting region. Below this
Okay.
region, yeah, I think it will retake the 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 bullish bias for the medium term.
Oh, okay. So there we have it, guys. So you've heard it from Manesh, you've heard it from Antonio, you've also heard it from me. If you're yet to watch the next move with Valetax, please head to our YouTube channel where I gave a clear outlook and a fundamental perspective of the markets coming for this week as well. That deeply carried, the bullish idea and stance for this week, where I stated that we're going to be seeing a bullish market this week, hopefully a bull back into bear narrative. But for this week, our major stance is bullish and hopeful for to see, shifting momentums for the continuation of the weekly bearish trend that is currently going on everything quotes the USD. But with that being said, I want to say a very big thank you to Manesh and to Antonio. Thank you for coming up quite early. It's quite early for Manesh. It's probably 6 a.m. now in your time, so you're probably going to get your cup of coffee. And Antonio as well, it's also a bit early for you, most likely about 9 a.m. your time. Thank you so much for joining in today. And I want to say a big thank you to our viewers and for those of you watching in different parts of the world and from home or in your office currently. Don't forget to trade smart and trade carefully with Valetax. And if you're yet to open an account, please do head to our website. Link is in the bio of our YouTube channel for you to get your account registered with a minimum deposit of just $1 and a minimum deposit of $50 in order for you to use our Pro and ECN account. And until next time, we'll see you on ValeTalks by Valetax. My name is Innocent Brian Ifere, and cheers,
Bye bye.
guys.
Thank you, guys.
Bye, Manesh. Bye, Antonio.
Bye bye.